Bring in show music, please.
This is Squawk Pod, and I'm CNBC producer Cameron Costa. On today's episode, investing in America's children. Hedge fund manager Brad Gerstner has been suggesting for years and seeding investment accounts for children. Today, billionaire Michael Dell and his wife announced a landmark gift of $6 billion to fund tax-advantaged accounts dubbed Trump accounts for 25 million kids. Gerstner joins us on the announcement.
We're coming together on the National Day of Giving. This truly is something that we can all get united around.
And what it can do to change views of ownership and capitalism in America.
It takes all of us, every family, every company, every philanthropist coming together to solve this problem.
And Heaven Hill Distillery, behind legacy brands like Elijah Craig and Evan Williams, has remained family-owned and operated for 90 years. Chairman Max Shapira on consumer taste for spirits.
Kentucky Bourbon and all distilled spirits are discretionary expenditure, and those discretionary funds are being squeezed. It's squeezed mightily by almost all consumers.
Plus, cryptocurrencies plunge, Costco suing the president for tariff refunds, and OpenAI's Sam Altman is calling a code red to improve ChatGPT in the face of artificial intelligence competition.
It's moving so fast. Do we want it to get there?
Not sure.
It's Tuesday, December 2nd, 2025, and Squawk Pod begins right now.
Stand Becky by in 3, 2, 1. Cue it, please.
Good morning, everybody. Welcome to Squawk Box right here on CNBC. We're live from the NASDAQ market site in Times Square. I'm Becky Quick along with Joe Kernen. Hello. Good to see you. Andrew's off today. Yesterday, we did see a little bit of turbulence in the markets. First trading day of the month, and it was the first down day for the S&P 500, the NASDAQ, and the Dow in 5 sessions. So it broke a 5-day winning streak.
Could have been much worse yesterday, obviously, for the NASDAQ anyway. The Dow was down 400, rallied back to not being as bad, but then finished on close to the lows, although the NASDAQ paired some of its losses, which is correlated maybe to this next story more than the Dow. We're talking about crypto. We're watching Bitcoin, big stories today. Crypto sell-off worsens, and that's Wall Street Journal lead that's other people saying 60 is a possibility, which wouldn't be.
Is that just technical perspective from?
It's just some guy that thinks with some of the leverage that's in the system right now that he just I don't know if he picked that number out of his
toes.
Yeah, head. But wherever he picked it, I don't know whether but it was at 20 and it went to 3, I think. 20,000 went to 3, and there was a time I think it went to 65 and then went to 17. So these are the kind of things, that have happened.
As you mentioned, though, that makes that an issue. That's why Michael Saylor at Strategy is now kind of beefing things up and saying.
I think it's we will talk about the market cap of Strategy. But Bitcoin had its worst, and cryptocurrency, worst day since March. Bitcoin fell about 6%, and that's to start the week after there's already been some tremors prior to that. And here's Strategy. Those shares fell more than 10% yesterday before closing about 3% lower. The company cut its 2025 earnings forecast and announced plans for a $1.4 billion reserve to support debt interest payments and 2 years of dividends on some of those preferred stocks that Michael Saylor has outlined the strategy of strategy on this show many times, and our eyes kind of glaze over. We understand about half of it, if we're lucky. It's funny because it's based on something that people don't really understand. Not all people really understand crypto that well. And then you start doing derivatives of crypto, and your head starts spinning. In a statement, Strategy founder Michael Saylor said the fund that he just set up will help the company weather the short-term market volatility. And Strategy stock fell by more than a third in the last month. It owns about 650,000 Bitcoins.
I don't understand everything about cryptocurrency for sure,
right.
But leverage is something that's a little easier to understand, and that's always been the concern there. If you take something that's pretty volatile to begin with and then lever it up, what happens with the underlying issues? And that's why he's putting up this $1.4 billion fund to try and assure people that, no, we're not going to be taken down by volatility.
When we've had him on, I've asked him, you keep loading, you're loading up at 60,000, it's gone to 17,000.
Right.
Were you sleeping okay? And wondering about whether and there were rumors that maybe there could be some kind of margin calls or something. And he has always been steadfast. And we'll have him on again soon, hopefully, be able to talk about all these things. It's weird that the hardcore Bitcoin hodler, if it was 90% hodlers, you wouldn't get this kind of volatility.
Correct.
So there's definitely some. It's not all strong hands and people that are in it forever.
OpenAI sounding an alert on its position in the AI race amid advances by other companies. We've heard and we've seen this, particularly what happened in the last couple of weeks with Alphabet and its latest iteration, which a lot of people say is better than what they're seeing from ChatGPT right now. Citing an internal OpenAI memo, reports say that the CEO there, Sam Altman, told employees he was declaring a code red to improve ChatGPT and is delaying other projects at the company, like advertising. OpenAI's place in the AI ecosystem has come under scrutiny after the release of Google's high-performing Gemini 3 model. The head of ChatGPT said on X that OpenAI's goal is now, in his words, to keep making ChatGPT more capable.
I guess we should have realized that the demise of Google search is greatly exaggerated. Why wouldn't the leading search firm vault into one of the leading AI firms?
Well, there are all these stories, too, about Sergey Brin going back into founder mode, that he was kind of challenged by someone at OpenAI to say, hey, this is like the greatest revolution in computing that's ever taken place. How can you be sitting on the same
in the past, legacy companies have missed the next big move. And that's why I was saying, okay, Google is, owns search, but there's no reason to think that their birthright that they'll be the leading AI company, but they went ahead and did it.
And when you have founders who get re-engaged and energized, I think anything can happen.
I don't have the discerning ability to tell who's great and who's not.
No, but the industry standards that have been run on some of these things, I was reading a 10-point one the other day, and where they come out ahead. Look, you've also got Perplexity that is getting picked up by businesses in some ways too. So there's a constant run.
One might be good at coding, one might be good at software, one might be good at video, one might be
consumer applications.
Yeah,
there's where the consumer wants to get a little chattier with you.
Is anyone gotten past Gigo and just scraping stuff to give you answers that it has no idea? It still can't think that this is, it still can't analyze. It's because I see it all the time.
Yeah.
It gives me answers and it's like, you are still just a glorified search engine. You're not doing any real
actual
analytical thinking.
Yeah.
It's not like what it's called, some generative, I guess. We're not there yet, I don't think. But it's moving so fast. Do we want it to get there?
Not sure. We are getting some preliminary numbers on U.S. Cyber Monday shopping. Adobe Analytics says that online spending was up 4.5% from midnight through 6:30 p.m. Eastern Time this year versus last year. The company projected that shoppers would spend about $14 billion by the end of the day. That would bring online spending from Thanksgiving through yesterday to close to $44 billion. And I remember when the increase is like 4.5%. That sounds pretty good for retail sales. For cyber shopping, for online shopping, the numbers back in like 1999, 2000, 2001, the numbers were growing by 200-300%.
Right.
And it was always that it was a much smaller number, so you saw bigger increases. Now you're getting to where online shopping is getting so significantly large
numbers,
that you're now talking about regular returns or increases of 4.5%, which you could see in comp store sales on a good year too.
Yeah.
Retail giant Costco is joining a lawsuit against the Trump administration seeking tariff refunds. Eamon Javers joins us right now with more from Washington. And Eamon, this now is something where you see a big retailer like that and maybe you sit up and pay a little more attention to it.
Yeah, this is one of the biggest names, Becky. In a 17-page lawsuit filed Friday against U.S. Customs and Border Protection, Costco said it has to act now because it's facing a December 15th deadline for a final tally of its tariffs this year, and that Customs has already denied Costco's request for an extension, given that these tariffs are being litigated in the Supreme Court right now. So the company also says that firms that paid these tariffs under the law in question are not necessarily going to be granted refunds unless they take independent action against the government, which is why they're doing this. Costco is asking the U.S. Court of International Trade for a declaration that collecting tariffs under the International Emergency Economic Powers Act, as the Trump administration has done in many cases, is actually illegal. And the company wants an injunction blocking further duties, as well as a full refund of all tariffs paid under the statute this year. Though importantly here, Costco does not reveal how much these tariffs have cost the company so far. A White House spokesman said yesterday the economic consequences of the failure to uphold President Trump's lawful tariffs are enormous, and this suit highlights that fact. The White House looks forward to the Supreme Court's speedy and proper resolution of this matter. Dozens of other companies have filed similar lawsuits. Remember, President Trump invoked the International Emergency Economic Powers Act to impose many of his tariffs earlier this year. But in August, the U.S. Court of Appeals for the Federal Circuit upheld a prior decision that found that Trump did not have that power under the law. The Supreme Court has agreed to take up the case, but it's not clear when a decision might come down, guys. So it could be any day. And you've seen the president posting about this again and again on social media, hammering home just how important he thinks a resolution in his favor would be.
Eamon, do you get the sense that other big companies are going to join this lawsuit as a result of Costco kind of stepping up? I always wondered if they weren't joining it because they didn't really want to stick their heads up and risk drawing the ire of the administration.
Yeah, we've seen some companies file suits here. Revlon is one of the biggest that's already taken action. A lot of smaller names, though, to be honest, given the scale of the impact of these tariffs. I think you're right. I think a lot of companies have been reluctant to go this far in opposing the administration. But as Costco said in their filing, they're facing this December 15th deadline, and so that kind of forced their hand.
Okay. Eamon, thank you.
You bet.
Next on Squawk Pod, the major Giving Tuesday gift from Michael Dell of Dell Computers. It's $6 billion to jumpstart the president's project for Trump accounts, investment vehicles for American children. Hedge funder Brad Gerstner, an early proponent of the idea, joins us next.
The idea was to start with the class of 26, and then it would move forward with every subsequent class. And the president and members of Congress said, hey, why don't we expand it to every kid under the age of 18?
This is Squawk Pod today with Joe Kernen and Becky Quick.
Stand by, Joe. Here's Mike. Cue.
You're watching Squawk Box on CNBC. I'm Joe Kernen along with Becky Quick. Andrew is off today.
It is Giving Tuesday, and in the spirit of giving, Michael and Susan Dell are announcing a $6.25 billion gift to be paid directly into accounts of 25 million American children. That works out to about $250 per child, and it's designed to accelerate the impact of Invest America. That's the new national program that gives every eligible U.S. child a savings and investment account that they can grow over time. Here with more details on that gift and on Invest America is Brad Gerstner. He's a champion of the cause. He's been talking about it here on Squawk Box and all over the place from the beginning. Brad, we can't believe you actually got this done. Congratulations.
It's incredible to be here, and incredible to be here on Giving Tuesday with this announcement. I mean, this is one of the largest gifts in the history of the country.
I think largest to children. Ever.
Right, largest to children. And by the way, Joe, it's not going to a charity that will then distribute some of the money to children. 100% of this is going directly into the private accounts of these children. Would have been impossible but for the passage of the Invest America Act.
I think what's important about this, too, because I always thought it was a little unfair that it went to kids who were only born after a certain date. Like, what about the kids who were born the week before?
Exactly.
I love what Michael and Susan Dell are doing here, which is to say we're going to take care of a lot of the kids that were born before those dates, who are a little older than that.
And remember, when I first came on, the idea was to start with the class of 26, and then it would move forward with every subsequent class. And the president and members of Congress said, hey, why don't we expand it to every kid under the age of 18? But we couldn't afford to give $1,000 to every kid under the age of 18. So we're really looking now to the power of philanthropy, the power of corporations. There's an incredible joint statement, joint letter out this morning from Senator Booker and Senator Cruz coming together, like in this day and age, that bipartisanship, saying that every company should contribute to these accounts. And I've already announced here, Uber and Nvidia, companies like T-Mobile and iHeart are all going to contribute to these accounts.
It's a Trump account. I mean, Booker, that must have been hard for him.
Listen,
to swallow hard.
We're coming together on the National Day of Giving. This truly is something that we can all get united around. Yeah. And I will tell you this. There's tremendous support in the philanthropic community. Michael and I will be leading the Invest America Giving Council, talking to all of these philanthropists, right, on both sides of the aisle. In the corporate community, moms and dads, churches and synagogues. The magic of this is these are privately owned and anybody can contribute to these accounts. So it's unlike just a charitable contribution.
Right.
This is really a new direct giving platform that's universal for every child born in America.
I love the idea for this. How do you then make sure that kids understand what to do with this?
Yeah.
Because that's the question too. It seems like the easiest way to fix things, give money to the people who need it. How do you then give them the tools to understand that if I continue to invest in this, if I continue to put money aside, save instead of spend, this is where I wind up.
Well, the place you start is they actually need to be able to open their phone and see that they have a little skin in the game, right? If you don't have anything and your parents don't have anything, it's hard to get excited about learning about financial literacy, stocks, etc. Now everybody's going to have that. 30 states already require a semester of financial literacy. I expect, and you will hear some announcements in the months ahead about efforts at the state level, financial literacy threaded in public education, because now the teacher can say, open up your phone, open up your Invest America account. Let's talk about how what it means to own a stock. Let's talk about the compounding. Let's talk about what it would do if you added another $20 a month to that account. So I think it gives us a platform for literacy and education around finances that we desperately need in the country.
Go big or go home for Michael. That's. I was thinking that's a lot of money, but he's doing all right. I think.
I mean, Joe, think about this. We have the Giving Pledge, right? I think we're one of the most. It's Giving Tuesday. We're one of the most giving countries in the history of the world.
Yeah.
Right. Think about Europe, where they had dynastic trusts, generation skipping trusts. Everybody was devising a scheme to hold on to the money. And yet in this country, we have so many people who said, I want to give away the vast majority of my wealth during my lifetime. I think that's unique in the history of the world, but it's very difficult to give away money at this scale.
Will this buy billionaires? Will Senator Warren say, wow, here's a good one, a good billionaire that's not a leech on society? Or probably
I'm not going to go there today, Joe. It's the National Day of Giving. It's about a unity.
Let's give him some grief.
And we got people on both sides of the aisle who are coming together to support this. I think that's what you'll hear later today from when we're in Washington, D.C. We're certainly going to be meeting with folks on both sides. It takes all of us. Every family, every company, every philanthropist coming together to solve this problem. And I think we're not only bottling up hope for every one of these kids, right? But we're aligning all these kids with the future of capitalism and the future of free markets, which I think is critical as we enter this age of AI.
Again, congratulations. I am amazed that you were able to get this done. So really, congratulations, and to see this continuing to grow.
Thank you for giving us a platform. I hope CNBC stays involved. I think that this can be, something that a whole new audience, right? A whole new feature we can talk to these kids about. Wouldn't have gotten done without us getting the word out there. But today is all about Michael and Susan. It's an extraordinary gift to the future of this country.
It will help if we start kids early on the benefits of free markets and capitalism.
100%, Joe.
I know you're not going to go, you say you're not going to talk about anything interesting, but I mean, we are at a point where 51% of our youth think that socialism is a better. We've got a mayor named Mamdani now in
that is a devastating risk to the country. Less than half of people under the age of 40 have a positive view of capitalism. But as the president has said, when you're left out and left behind, when you have no skin in the game, it's Peter Thiel's famous tweet that went around over the last few weeks. When you have no ownership, it's a lot easier to want to burn the house down. But the fact of the matter is, when every one of these kids opens up their phone, sees they own a little slice of Microsoft, of Nvidia, it's a lot easier to get excited about capitalism. This is the first thing we've done in the history of the country We're creating a private prosperity account for every child. They will all be in the game. The president's Main Street agenda, this is getting all of those people on Main Street, folks where I'm from, in rural Indiana, who don't have anything, feel left out and left behind. This gets them on the side of the upside of America. We got to get everybody believing in the American dream again, and there's no reason not to. We have the most dynamic economy in the world today, but everybody needs to share in that upside. This gets them going. This gets that little snowball going. The $250 from the Dells is just the beginning. Once that snowball goes, we know that parents and others will add to the account. Savers save more.
And by the way, I didn't read the rest of the introduction when we had you here. I think most of our viewers know you're the head of Altimeter Capital. You're a big tech investment firm. You've got top holdings that include NVIDIA, Amazon, Alphabet, OpenAI, Microsoft, lots of others. So let's talk a little bit about what you're seeing in the tech economy, in the broader economy, and where things are headed, because there's been a lot more volatility lately.
Yeah, I happen to think that volatility is good, and let me tell you why. Yeah. We're coming up on the 3rd anniversary of ChatGPT. We've come a long way fast. You've seen NVIDIA add almost $200 billion of revenue in the last 3 years. Truly extraordinary. Transformational phase shift, super cycle going on in our economy. It added 100 basis points to GDP this year. But remember, this year we had 225% drawdowns in NVIDIA. It hit $90 earlier in the year on the DeepSeek scare, right? And so there's going to be volatility when you're early in these phase shifts, right? That wall of worry prevents the bubble that everybody's worried about. And when you look at the multiples today, take NVIDIA, for example. I think it's trading at 23, 24 times fully taxed earnings on next year's numbers, 18 times on 27 numbers. That is not the stuff that bubbles are made of. Right, I think the rest of the Mag 7 all trades somewhere between 25 and 30 times, maybe Meta's at 21 times earnings. So to me, taking a little of the gas out, having some of these conversations and debate, very healthy. And what I see out there right now is a tremendous amount of progress on the model side. But I think the diffusion, the rate at which this transforms lives, both consumer lives and enterprise, that takes time. And that's what we're seeing play out. We're seeing the debates about NVIDIA versus Broadcom, Google versus OpenAI.
Well, yes, and that's what I was going to get to. Is the new version of Gemini better than ChatGPT?
It's terrific. It's terrific. Remember, a year ago, we were counting, Google out of the equation. I've said on Twitter and otherwise, we own Google. Yeah. I've said it's very difficult to pick a winner here. So you can own them all. You can own OpenAI and Anthropic. You can own Google and Microsoft. And I think at this phase, you probably should do that. I think Google's done an incredible job. Remember a year ago, Satya was saying, we're making Google dance. I think Sundar is making people do a little dancing today. Yeah. And so that's part of the competitive dynamic that I think is great for the country. It's what's going to keep us on the leading edge.
That's great for the technology spending. There are a lot of questions about what this means for the business world, too, for enterprise. Yesterday, Jensen Huang was on Squawk on the Street with Jim Cramer, talking a little bit about that deal that they did with Synopsys. And that was pretty interesting to hear how it's got to be able to be used by these big industrial companies to be able to really make the next steps. And Jensen made the point that I thought was really interesting, that 90% accuracy is okay if you're dealing with consumers. It is not okay if you're in any of these big enterprise issues.
That's right. That's right. Think about it this way. The machine that builds the machine, right? That's really what he's talking about. We saw that with Tesla and Elon, right? Elon used to talk about we can't get to where we need to get to with electric cars until we first build the machine. Right, a totally new way to manufacture cars that can drive down the cost. And that's what you see Jensen talking about, for example, in the design of chips, right? That you really imbue the entire industrial economy with AI. And all of those benefits lie before us. I think we're heading into a very significant productivity boom. I've talked about the golden age of margin expansion for a lot of industrial and other companies in America that can simply do more with less. Our economy's going to see that productivity tailwind. But it's never a straight line up and to the right, Becky. And so I think for people who are watching it, you've got to anticipate we're going to have volatility. I remember early in the internet super cycle, Google would be up 5 or 10% a day. Remember when Facebook went public, right? And then it broke $20 a share, right? It broke issuance because everybody was worried, could they possibly monetize on these mobile devices? When you're early in these super cycles, there's a lot of questions, and that's where we are today.
You're talking about the winners that came out of that. There was a lot of volatility in Pets.com, too.
For sure.
Webvan, and by the way, those companies went bust.
And there are going to be companies in this cycle that go bust. There are 1,000 companies in Silicon Valley valued over $1 billion that are trying to raise money. It's not going to be equally easy for all of them, right? But I think that's part of the process of creative destruction, right? It's okay that that some companies aren't going to make it.
We talked earlier this morning about some comments from Masa-san, who said that he didn't want to sell his entire NVIDIA stake, but he had to in order to be able to put it into OpenAI. You've got bets on both of those companies.
Yes.
What do you think about that?
I wish my bet in OpenAI was as big as Masa's, but
would you sacrifice your NVIDIA bet for it?
No, like I said, NVIDIA has been an extraordinary winner. We invested in NVIDIA in December of 22, right after we saw ChatGPT. The stock's up over 10 times. 10x over that period of time as the revenue went from roughly $30 billion a year to over $200 billion a year. And they just told us that we should expect a run rate by the end of next year of $100 billion. And this is at the same time that Broadcom is doing extraordinarily well. What Hock Tan has done partnering with Google to build out TPU 7 is extraordinary. That's going to force NVIDIA to be even better. So I think we've seen a lot of winners, and you can see from the logos that Altimeter owns, our choice has been really to own a lot of the best names that are benefiting from this super cycle.
We also have talked a lot about Bitcoin this morning and the volatility you've seen there. Maybe volatility is not a surprise, but when you layer on leverage on top of that, as strategy has done, it does raise a lot of questions. Do you play in leverage in your holdings?
No, we run very, very limited. As a hedge fund, we run very limited leverage. We certainly would not be levered Bitcoin. And in fact, I've commented on Twitter about it with respect to MicroStrategy. It works incredibly well on the way up. But I said I didn't understand the strategy. And when I can't understand something that somebody explains, time after time after time, that's a warning sign to me. And I think you're seeing kind of some of the unlevering that is occurring. Bitcoin this year is down 10%. Gold is up 50 or 60%. I hope we can dispel the myth, right? One is a risk asset and one is not, right? And so it doesn't mean that you shouldn't own Bitcoin. I own some Bitcoin. And I might be buying a little bit more, as it comes down. But it is a speculative asset that over time will have more and more utility. But we have to be honest with what it is today.
It will have more utility. Will it have more store of value features than you just discounted?
It's a great question, Joe. I think as it has more utility, as it's used more in the financial system, as it becomes a part of more and more endowments and sovereign wealth funds, right? That in and of itself becomes a self-fulfilling prophecy.
The philosophical thesis of why it should hold value because of the 21 million and
Correct.
Because of the unbanked that are living in countries with 20% inflation. They work, their ass off, and they put it in a bank, and it's worth half as much in a year. They put it in Bitcoin, it stays stable. Why isn't that working right now to hold prices higher?
Well, I think that what you've seen over the course of last year is a speculative rush into Bitcoin.
Yeah,
we got the Genius Act, the Clarity.
Yeah.
Yes, again, of course, it's reset. I don't think, I think these are more likely approaching buying opportunities than selling opportunities. I do.
That's saying something at 87,000, because I saw someone earlier say that it could go to 60, and that sounds almost like the end of the world. But Bitcoin was $3,000 a couple of years ago.
I will stipulate this: it's all possible. It is a risk asset. You should treat it appropriately in your portfolio, because if MicroStrategy is forced to delever, if there's an unwind there, it could get really messy in the short run, which is probably why I would be waiting to see how this plays out.
But it doesn't go to zero, does it?
No.
Okay,
I think
saying something.
The black swan, right, is that somebody hacks crypto, whether it's quantum or otherwise. There was some news out overnight about, Anthropic running some vulnerability tests on the blockchain. Those things, I think, will be important if this is to have durability.
The only thing I will say is nothing would ever surprise me. Did you ever think you would see oil go negative? Like someone saying,
I remember that. March of 21.
Right, paying you to take it off my
couldn't
hands.
buy any.
Yeah.
I've got a big backyard. I could have tanks back there, Brad.
No doubt. But just back to the AI trade, the innovation that I see going on in Silicon Valley and the utilization of these models that are going on, this is, I've said here before, it's bigger than the internet itself. It doesn't mean that you're not going to have zones of disillusionment where people, get worried. And I think as we head into 2026, the big question is this: are the revenues showing up? I'm not worried about compute. NVIDIA is basically, we have analysts in Asia this week. I'll tell you, the biggest challenge for NVIDIA next year is going to be delivering enough Blackwells and Rubens that their customers want. I think the same thing with Broadcom. The problem is going to be capacity. They have tremendous demand. However, if OpenAI falls short of revenue next year, if Anthropic falls short of revenue next year, if the Mag 7 reports AI revenues that are less than people expect, I think that would be the moment that we have a challenge to, we really have that zone of disillusionment.
Okay, so then less than 2 weeks ago, we were thinking that the Fed might not cut rates, was less likely than not to cut rates in December. Right. And all of a sudden, all of these risk assets panicked because the theory was, if we don't have easy money, we can't continue the games the way they've been set up. We cannot continue these business models because it doesn't work if you don't have
I'm not sure I buy the predicate of that argument. Okay. I don't think that's what was happening in risk markets. I think that things had gone up a lot, and we were in nosebleed territory on some multiples, and they've given back 5-10%. I already talked to you about earlier in the year.
So you don't think it matters if the Fed does not cut rates any further?
I do. I actually think what the Fed is doing matters tremendously. So let's talk about two things. Number one, earlier this week, they ended quantitative tightening, right? Mm-hmm. Which is significant. We've let $3.5 trillion roll off the federal balance sheet. That means when those bonds matured, they were not back in the market buying another one. Now they are. That will have a positive impact.
But we're still dealing with a much bigger balance sheet than we were.
Of course, and I suspect that if you have, the front runner, good friend Kevin Hassett, who, if he's elected Fed chair, right, I think his view, these publicly stated, well known, is he thinks the Fed should have a smaller balance sheet, a smaller role, and lower rates, and let the economy, really grow. And so I think that would be a positive for markets, right? I do think rates are going lower next year. Why do I think rates are going lower?
Because you mean Kevin Hassett being named
Correct.
Would be positive for the markets?
I think fundamentally, though, he's going to have to follow what happens in the markets. Part of the reason rates are going to go lower is because inflation is under control.
Right.
Part of the reason rates are going to go lower is because labor and unemployment is going up.
Right.
That is the role of the Fed. We're in restrictive territory. The Fed has been slow to roll off on these rates. And I think now we have room to go.
This would absolutely be an independent Fed, that not one that's being run by the White House because they want to see cheaper rates, but one that is being run by somebody who says, no, I'm going to follow what the Fed's two mandates are.
Listen, I think it's grossly unfair to Kevin Hassett to say that he would, simply be a puppet of the president.
This is the reason that people say it, because the president would like someone who thinks like he does on these lines.
And listen, the president has the prerogative, just like Biden did in nominating, in picking the Fed chair. And so, of course, a president's going to pick somebody who they think is generally aligned with their worldview. Kevin's worldview, which is well documented on this channel and others over the last decade, he is a massively pro-growth, pro-business, economist. Right. And he believes that if you get out of the way of business and you let business do what it does and competitive markets compete, that will lead to massive benefits for the economy. So I think that I don't think he would ignore it. I think if we were in June of 21 and he saw inflation skyrocketing, I think he would have been raising rates way faster than Chairman Powell did in June of 21.
So just back to AI just for a second. So we're building it out. We're in the build-out phase. So companies like NVIDIA, they're probably not overvalued. When the payoff period finally comes, where everybody's got their models and they're all built, and now businesses have to actually use AI to increase productivity or to do something. We've seen the benefits of the internet. No one could have predicted it. Will there be benefits commensurate with that? And will that mean 95% of the people are on UBI and in universal basic income? We got nothing to do. And for it to be that powerful, none of us are going to be working.
disagree vehemently with the second half of that, but let me start with the first, okay? The first is the impact of AI going to be big, and is it already showing up? I would stipulate that it's already showing up. That's why you're seeing these growth rates in these companies of 20-some%, but they're only adding to their personnel at 1 or 2%, because they're getting more efficient from AI today, dramatically more efficient. They're investing in things because they're working today at Meta, at Google, at Amazon. I will tell you this, you couldn't take ChatGPT away from my employees today or Anthropic away from my employees. They have an agent on their desktop that is working for them all day long doing deep research on stocks. So the companies that adopt it the fastest, and remember, in 2001, not everybody got on board the internet train either, but the companies that did benefited tremendously. And so that's what I mean by the rate of diffusion. On the second half of this, Joe, I am firmly in the camp, and we have hundreds of years of economic history.
I know.
That technical innovation expands the pie.
It's different this time.
Expands the pie for America. We will have dislocation. There will be people who lose their jobs. Drivers will be replaced by autonomy. And we need to deal with that as a society, but we need to wait until the problems come.
Brad,
we can't preempt this and shut down AI because we're worried about it.
Thank you for everything. We've loved it. We appreciate your time.
You.
Brad Gerstner, that does it for us today.
Cheese will be next.
Coming up, the largest family-owned distillery in America, Heaven Hill. It's been serving up spirits through nearly a century of consumer and policy changes. We talked to Chairman Max Shapira about his business and, of course, his bourbon.
Whenever we say bourbon, we always say Kentucky bourbon.
Okay, now why basketball and horses?
Basketball is a big sport as well.
Yes.
Squawk Pod will be right back. You're listening to Squawk Pod from CNBC. Here's Becky Quick.
All right, welcome back, everybody. It's been a tough year for distillers, everything from a post-pandemic pullback in liquor consumption to tariff disruption in the global markets. And joining us right now is Max Shapira. He is executive chairman of Heaven Hill. That is the largest family-owned and operated distillery in America. And Max, it's a pleasure to have you here today.
Well, it's nice to be here. Thank you for having me.
So you're in Kentucky, and we were just talking off camera about why is Kentucky the place where all bourbon is born?
That was at the original 13 colonies. After those 13 colonies, Kentucky was the next on the list to be part of the Union. People moved to Kentucky. They were farmers. They grew grain. They turned that grain, instead of taking it in the form of grain to market, turned it into whiskey. And they had the Ohio River to take it down to be enjoyed by people in Memphis, New Orleans, and other places. So that's really sort of a very quick answer as to why it all started there.
Historically speaking, and it's stuck and it's stayed. And
today, 95% of all the bourbon is made in Kentucky. So as far as we're concerned, whenever we say bourbon, we always say Kentucky bourbon.
Okay, now why basketball and horses?
Basketball is a big sport as well.
Yes, good players.
Indeed.
And fast horses.
Yes, indeed, yes.
Well, let's talk about what's happening in the bourbon industry right now, or in the liquor industry writ large. We have seen a pullback in consumption. You've lived through a lot of these things. What do you think is happening right now?
Well, we're on the cusp of celebrating our 90th anniversary in a week or so. So we've seen this all over the years, and everybody thinks this is so unusual, and it is a bit unusual, and I can't deny that there's a number of headwinds. But the facts of the matter are, over the course of the time that our company's been in business, 90 years, we've seen this happen in so many occasions, whether it's pullbacks, growth, all the things that are happening today have happened over the course of the time that we've been in business. And I always say we've seen it all in a multiplicity of different time frames.
What is happening, though? Is this a consumer that bought a lot of this during the pandemic and is now drinking less, or do you think they're still living off the stocks that they bought during 4 or 5 years ago?
Well, the consumer always is changing. We saw this big changes when they weren't drinking as much bourbon in the period from about 1960 for a couple of decades. Then we've seen the great bourbon renaissance. And today, though, we see the consumer still enjoying bourbon. We think one of the issues that the country or that the individuals face today, though, is the fact that they are really strapped for funds. Kentucky bourbon and all distilled spirits are discretionary expenditure, and those discretionary funds are being squeezed. It's squeezed mightily by almost all consumers. That's had a big effect. I think the most important thing, though, is the fact that COVID has a leftover effect. You have consumers today who are used to staying at home. You've got younger consumers who are getting all their news and sociability over the internet, over their phones.
So they're not at the bars
things.
drinking socially.
And so they're not going out. I predict that over the course of the years ahead, as the further we get away from COVID, and the more that becomes a really distant memory, that you're going to see a re-socialization of people wanting to go out, wanting to be with their friends, wanting to celebrate, whether it's with a colleague or with a family member or whatever, a significant event. And you're going to see a whole lot of turnaround in this.
We also have some other headwinds, as you mentioned, the tariffs that are out there, and just the idea that the bourbon industry has routinely been targeted over the years, thanks in part to former Senate Majority Leader Mitch McConnell. If another nation wanted to put some political pressure, they would target bourbon and say, we're not going to take bourbon, or we're going to put some excess tariffs here so that you all feel the pain politically. Is that still happening?
That's still happening to some extent, but frankly, the tariffs have been a relatively small part of what's happening today. The European Union, United Kingdom, have had no increases in tariffs during all of the recent turmoil over the implementation of tariffs. The biggest problem that we've had has been in Canada, where not only there was a large tariff, which I believe has now been removed, but they took all of the products off the shelves.
Right.
In effect, prohibition came back in Canada overnight to us.
Has that changed? Are Canadians more likely to buy Kentucky bourbon?
Well, we don't know that, because at this point, the bourbon and other American distilled spirits
it's still
are
off the
still
shelves?
off the shelves.
So what does that mean for your bottom line? How much were you selling to Canada?
Well, that was a
before?
relatively small market. Again, the preponderance of the American whiskey business, the preponderance of bourbon, is here in the United States.
Young people don't drink bourbon, do they? Is cannabis an issue? Then I'm thinking, if we're going to go and start socializing again, you're not going to want to be like wasted. You can't even talk when you're with this. As powerful as the weed is these days, that's not social.
Well, the interesting thing is, Joe, is that the fact that consumers today are still young and still developing their taste styles. We talk about the Generation Z. Nearly half of Generation Z isn't even of legal drinking age, but yet we're ready to throw.
Is it okay to target them, Max?
I was going to say, what are you doing?
No.
Samples to 20-year-olds?
They're not even of legal drinking age.
Right, but once they are, can you go after young drinkers with? I guess you can with ads and things like that. Drink in moderation, whatever, because you like the taste.
Today, of course, we have so many different ways of speaking to consumers, and we can target consumers across a wide spectrum. And one of these days, we'll be able to send a message with using AI directly to you or directly to you as you walk into a store.
Do you advertise on social media?
Absolutely. There's so many different ways of reaching consumers today, whether it's in visitor centers, face-to-face. We have visitor centers in Kentucky where we'll bring through about 250,000 people a year to enjoy and hear the story of bourbon. And those are the kinds of stories that resonate with the young consumer today. They're looking for something unusual, different, out of the ordinary, that have transparency and have a great story etched in history.
I do see some ads with people out and they're having fun. They got a couple of beautiful ice cubes with some a dark liquid in it. So I think in my view, the older you get, the hangovers start really hurt more than they used to, right? So you're going to lose the old guy. They're going to stop. You can't drink when you're in your 60s like you used to be able to. You just can't. So you're going to need to always be marketing to the key demo, which is 30 years old, 25 to 40, something like that.
We're always looking to pivot to new consumers.
You must.
Every day of the week.
Yeah, because I'm not going to have 6 of those at night. I'm just not. Michael, none at lunch. I'm not going to have any, to be honest with you. I'm like, my finger's up in the air with some Chardonnay, which I know is lame, but that's where I am right now. I'm sorry. I'm not going to be your guy.
if you came down to Kentucky,
I might start. Oh, great! That's a good idea.
I will guarantee you.
You know what time my alarm goes off now? It's 3:30. 3:30.
I will make you a drink, and you'll say,
okay,
"This is the best
this
thing
is
ever."
good. All right, and I want that the first 6 go down pretty smooth. No, I don't know.
It'll be great.
Okay.
Max, thanks a lot for coming in.
Nice to be here.
That's the podcast for today. Thank you for listening. Squawk Box is hosted by Joe Kernen, Becky Quick, and Andrew Ross Sorkin. Weekday mornings on CNBC for 3 full hours, starting bright and early at 6 a.m. Eastern. To get the best of our TV show right into your ears, follow Squawk Pod wherever you get your podcasts. We'll meet you right back here tomorrow. Have a great day.
We are clear. Thanks, guys.